Last year was an amazing year for Liberty Gold. We transformed the company. We moved our strategy from exploration and discovery into development with a very clear, disciplined approach to build a new gold mine. And we brought on a new technical team. We refreshed the board. I took the chair as the CEO, and we found some traction in the market. So we're very excited, and we see a fantastic future ahead for Liberty Gold. I will be making forward-looking statements. These are the appropriate disclosures. The first forward-looking statement is this one. It's an interesting thing to live in what they call the Valley of Death, or the orphan period, if you want to be a little politer. The money that's coming into the gold space and came in over the last year and still continues to come in has been looking for where's the great opportunity. And the great opportunity in the gold space has really always been the bottom of that trough. But with gold ramping up in price, where do you find a multiple? Where do you find a re-rate opportunity when all the seniors are fully valued, where producers are fully valued? Exploration continues to be a casino, a roulette wheel. So you got to look to the developers. And those developers that are serious about building mines are the ones that are having the re-rate, and we believe we're in that pack, and that we also have a good way to go. This is the Black Pine project, a large plus 4 million ounce in indicated oxide gold deposit in southern Idaho, previously producing in an open pit run-of-mine heap leach. We came out with a preliminary feasibility study last year. You can see the scale of this project, just under 200,000 ounces a year for the first 5 years, 17-year life, and a $2,000 gold, 32% IRR. A nice project. Currently in feasibility and improving every time we touch it. This is the company, 40% held in institutions. We brought Centerra Gold into the stock middle of last year. They came in at a 10% premium to VWAP, giving us $32 million in treasury at the end of the last reporting period. That money, together with the warrants that come in April this year, May this year, and April next year, provide us sufficient funds to complete feasibility, complete permitting, and take us all the way through to a construction decision in late 27. So we do not need to go back to shareholders. Hugely important. We have big institutions in the stock. We've had them for a very long time. The Van Ex, the Franklins, the Mercks, RCF. Wheaton came into the register a couple of years ago. They hold the only royalty on Black Pine, which is 0.5%, and we have a 50% buyback right. So rather uniquely in the US, here's a deposit with a 0.25% royalty. That gives us all sorts of financial opportunity when we look to project finance this. Where are we? We're right in the northern shores of the old Great Salt Lake. The deposit's actually located literally adjacent to the shoreline 10,000 years ago. This is arid, dry terrain, high evaporation rates, no vegetation, no surface water, previously mined site, a perfect place to reopen an old mine from an environmental impact point of view. Low cost, long life, largely de-risked. This is a fantastic new project. And we have been very successful in taking the project through permitting and engaging with the government to get this as one of the premier development projects in Idaho that's in development. This is the resources and the reserves, 3 million in reserves, just under 5 in resources. This is at a $2,000 gold price. We're in the process now of working through our resource model. We would see somewhere above 2,500 to Joe's slide recently, somewhere between 2,005 and 3 is probably where we'll pitch our resource. But you could see the deep colors inside those gray pits, that's the resource. All of the colors outside that, the softer pastel shades, those are blocks that are modeled but don't sit in a resource and represent blue sky upside opportunity for us. This is a very large gold system. We see 8 and beyond in terms of millions of ounces. They will be developed over a period of time. We don't need those for feasibility. But the feasibility model, which we said we will release in Q1, will show a nice increase in indicated ounces on top of that 4.16 million. I've mentioned these before. These are a great set of financials for a preliminary feasibility study. The line in yellow at the top is $2,000 gold, so $500 million NPV for a 3-year payback. When you take it to $3,000, which seems eons ago, given that we're at 5 now, we're on just over a year payback for a $1.8 billion NPV. Calculating those numbers today, we're north of 3. So you see huge leverage from metal price to value in this type of deposit. And that's because we transform, at increasing metal prices, we transform material that was waste into ore. That has a positive impact on the strip ratio and really works with the economics. $300 million build. This is low capital cost for a 200,000 ounce a year producer. We see some negative stress on our costs going into feasibility. Clearly, we can see price escalation. There's labor escalation in the US, but we target to hold that number with a 3 in front of it in the feasibility study. We will see increase in our AISC. It's currently at 1,400, somewhere 15 to 16 is probably where we're going to sit. But we're looking today at margins in excess of $2,000, $2,500 an ounce. So at 200,000 ounces a year, this is a plus 400 million free cash flow annually. That's a pretty attractive project for 300 million investment. This is what it looks like for those who perhaps understand what heap leaching is. It's a single large leach facility and a beautiful planar sloping site, so we don't have any geotechnical issues. It's a multi-pit operation, Discovery and Rangefront being the 2 principal pits. We have a small process facility, which is an ADR plant, which processes the dissolutions off the heap. And we have site services, which is basically a truck shop. This is a simple build. Water supply in the basin directly adjacent to it. And that big blue line is the I-84 interstate highway. We're 2 hours north of Salt Lake. These are some of the easiest access conditions of any project in the US. Very, very good. Easy access, easy to operate, power to the front gate already. This project's a no-brainer. Project timeline, we were very fortunate to get ourselves involved and approved in what's called the Fast 41 process. That is a US government initiative to speed up the famous NEPA permitting process. We got approved by that last week, and we're now in a 60-day period where we're renegotiating this permitting timeline. The government, as I'm sure you're aware, is pushing hard to improve upon those, so we will see where that goes. We anticipate either confirming this time frame or potentially improving that time frame. We will see how that goes, but worst case, we have the best outcome that you can get in terms of internal support in the government to move this forward at a sensible and reasonable way through that permitting process. We anticipate a record of decision early 28, where construction starts, and first metal December 28. So that means we are likely to be putting in orders for long leads this year, end of the year, when we come out with our feasibility study in October. So we are right in the drop zone to get this project up and running. This is the work we did last year. All of the green holes are the drilling that put in the increase in resource. We had a very targeted plan to upgrade indicated from inferred to indicated, and you're going to see the results of that as we come out with the resource very shortly. Engineering is proceeding very nicely. We're currently doing mine planning, and cost estimation will start within about 3 months. We also published some nice drill results from that drilling, and we can see, particularly in this area, This thing is open. These are high-grade +1 gram intercepts. You can see we have lenses of grade flowing through this carbonate column. There's lots of exploration opportunity, lots of mineral growth upside in this deposit. We've just touched the surface. Last slide. What are our catalysts? What are we telling the market over the next short period? Well, we're going to have an updated mineral resource within the next couple of months. We're going to have a result from the renegotiation of the project schedule to lock in a time frame approved by the federal government and monitored internally by that government. That'll give us as much certainty as you can get on when we can build this. We've got metallurgical test work from bulk sampling. They will come in Q2, and in Q3, we anticipate to be very close to finishing feasibility. Q4, long leads, and the start of detailed engineering. We have the right team in place, we are fully funded, and we are committed to moving forward in a professional way to build this mine. So that's what a gold developer in the Great Basin building a run-of-mine heap leach oxide looks like. And I invite you to our stand on the far end if you'd like to discuss any further points. Thank you for your time.